Hey everyone, welcome back to Corporate Decoder. Today, US GoldMining Incorporated just filed their quarterly report, a 10Q, and I am seeing some interesting shifts in their cash position and spending. Quick note, this is not financial advice, just my take on public filings for educational purposes. This company is all about gold exploration out in Alaska, and while they are not producing gold yet, their spending and financial health are key to watch. Let's dive into what their latest report tells us. We are looking at the company's financial snapshots for the 3 months ending the 31st of March 2026. This filing gives us a peek into how the company is managing its money and what its plans are. They are focused on developing their Whistler Project in Alaska, and a big part of that is how much money they are spending on exploration and how they are funding it all. Let's start with the balance sheet, which is like a snapshot of what the company owns and owes on the 31st of March 2026, and compares it to the 31st of December 2025. One of the first things that jumps out is their cash. As of the 31st of March 2026, they had about $4.7 million in cash and cash equivalents. That is down from $7.3 million at the end of the previous year. This drop is significant and suggests they have been using their cash for operations and development. Now, look at prepaid expenses. These are costs paid in advance. On the 31st of March 2026, they jumped to over $1.2 million, a huge increase from just around $80,000 at the end of 2025. The filing explains this large increase is due to advances made to a technical consulting company for managing their exploration program. This means a big chunk of their cash is being used to fund future exploration work. On the other side of the balance sheet, their total liabilities went up slightly to about $873,000 from $837,000. This is a relatively small amount compared to their assets, which is generally a good sign. Stockholders' equity, which represents the owner's stake in the company, decreased to about $6.24 million from $7.61 million. This decrease is mainly due to the net loss the company reported for the period. Next, let's look at the statement of operations. This tells us how much money the company made or lost over a period. For the first 3 months of 2026, the company reported a net loss of about $1.93 million. This is a bigger loss than the $1.29 million they lost in the same period of 2025. A big reason for this increased loss is their exploration expenses. They spent about $532,000 on exploration in early 2026, up from $223,000 in early 2025. The company states this increase is due to completing a preliminary economic assessment and stepping up exploration activities for their Whistler project. This is expected for an exploration company, as they need to spend money to find and evaluate potential mineral deposits. Their general and administrative expenses also went up. For the first 3 months of 2026, these costs were about $1.41 million compared to $1.06 million in the same period of 2025. The company points to higher consulting investor relations expenses and notably a significant jump in stock-based compensation. This stock-based compensation increase is partly because they reassess the probability of meeting certain performance conditions for restricted shares, which then required recognizing more compensation expense. Essentially, they are recognizing the value of stock granted to employees and executives as an expense. The combination of higher exploration and administrative costs led to a larger operating loss of $1.98 million in early 2026 compared to $1.32 million in early 2025. This shows that developing their projects is costing them more. Now, let's look at the cash flow statement. This is crucial because it shows how cash is actually moving in and out of the company. For the first 3 months of 2026, the company used $2.54 million in cash for operating activities. This is a substantial increase from the $921,000 used in the same period of 2025. The report highlights increased operating expenses and that large advance payment for exploration work as key drivers for this higher cash outflow. In their investing activities, they spent $237,000 on purchasing equipment in early 2026, whereas they didn't report any such spending in early 2025. This suggests they are investing in physical assets for their operations. On the financing side, they had some cash inflow from warrants being exercised. They received $108,000 from people buying company shares using their warrants. This is a small amount, but it does show some investor confidence and provides a bit of funding. Digging into the details about their stock, we see a few key things. They have an at-the-market or ATM program which allows them to sell shares into the market. However, for the periods ending the 31st of March 2026 and 2025, they actually sold no shares under this program. So they had the ability to sell but they didn't. They also have restricted shares granted to executives and consultants. These shares have performance-based conditions tied to project development and market capitalization. As of the 31st of March 2026, a portion of these shares still remain unvested, meaning they are not fully owned by the recipients until certain goals are met. The company recognized about $215,000 in stock-based compensation expense related to these restricted shares in early 2026. Let's look at their warrants. These are like options that allow holders to buy company stock at a fixed price. As of the 31st of March 2026, there were over 1.73 million warrants outstanding, with an exercise price of $13. A really interesting point here is that since the end of March 2026, the company has extended the expiration date of these warrants multiple times. The latest news indicates they are now potentially expiring in late May 2026. This is a common tactic to give holders more time to exercise, but it also delays potential cash inflow for the company from warrant exercises. They also have stock options granted to employees and directors. In early 2026, they recognized $159,000 in stock-based compensation for these options. The company is calculating the value of these options using a model called Black Scholes. Then there are restricted stock units or RSUs. These also have vesting periods, and in early 2026, the company recognized about $80,000 in compensation expense related to them. This directly impacts the net loss per share. For the first 3 months of 2026, the company reported a loss of $0.14 per share compared to a loss of $0.1 per share in the same period of 2025. The number of shares outstanding has increased slightly, and the larger loss per share reflects the higher overall loss for the period. They also talk about financial risks. Liquidity risk is the risk that the company won't have enough cash to cover its obligations. They mention that their ability to operate and fund exploration relies heavily on issuing new shares, warrant exercises, and loans. This is a common challenge for junior exploration companies. They believe their current cash plus anticipated funding will be enough for the next 12 months. But this is always a critical point for companies at this stage. To keep the Whistler Project in good standing, they need to make annual land payments of about $230,000 and have labor requirements of around $135,000 each year. These are ongoing costs they must manage. It is also worth noting their related party transactions. They share resources with GoldMining Inc, their parent company. They also incur costs with Blender Media Inc, a company linked to a family member of a gold mining executive for services like it and marketing. While these transactions are at cost, it is always good to be aware of them. Moving to the management's discussion and analysis, this is where they explain the numbers in more detail. They reiterate that the higher exploration expenses are linked to completing their preliminary economic assessment, or P, and planning for the 2026 exploration program. This P is a critical step in evaluating the potential of the Whistler project. The increase in general and administrative expenses is again highlighted, with stock-based compensation being a significant factor. The report mentions a reassessment in 2025 of performance conditions for restricted shares led to additional compensation expenses. This means the value of stocks granted to insiders is recognized as an expense when it becomes more probable that the company will achieve certain milestones. Management confirms the decrease in cash from $7.38 million to $4.71 million, mainly due to operating and exploration expenses, with some offset from warrant exercises. They emphasize that their ability to continue operations relies on external financing, including issuing more stock, which can be challenging in uncertain capital markets, especially for smaller companies. They also touch again on the ongoing costs to maintain the Whistler project, like land payments and labor requirements. So, what is the big picture here? GoldMining Inc is actively pushing forward with exploration at its Whistler project. They are spending money on studies and on the groundwork, which is leading to higher exploration and administrative costs and a bigger net loss. Their cash position has decreased and they are relying on external funding, which is standard for this stage of a mining company. A key point to watch will be how they manage their cash burn and the success of their ongoing exploration efforts. The extended warrants are a point of interest too, as their eventual exercise or expiration will impact the share structure. What I am watching is their ability to move from exploration to a stage where they can demonstrate actual economic viability for the Whistler project. The preliminary economic assessment is a step, but the real test will be consistent progress and attracting further investment. Alright, that is our breakdown of GoldMining's latest filing. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.